We start the show with breaking news. The Bank of Canada making its trend-setting interest rate decision for the third time in 13 meetings. They are keeping their interest rate steady at 5%. We are seeing the Bank of Canada issue its trend-setting rate decision for the September meeting, keeping the rate at 5%. That's exactly what was expected this time around. This as inflation is still sitting above target. Headline inflation coming in at a range of 3.3%. You're seeing the Canadian dollar basically neutral to this event right now. The Bank of Canada keeping its trend-setting rate at 5%. Of course, the question will be, what happens next? Are we done? And for that, let's bring in our power panel for the hour. We've got Jim Thorne joining us from Wellington Altus Private Wealth, Ed Devlin joining us, formerly of PIMCO, now CD Howe, and of course, Earl Davis joining us from BMO. I'm going to dig into the details, but Ed, I'll kick things off with you. No change. Is that as expected? And what do you expect next?
Yes, that's definitely what the market was pricing. And, I think we're probably, I think we're probably done. But I think people who have too much conviction around that, any view, quite frankly, are maybe being a little bit foolish, because I think that there's so much uncertainty out there that, can we re-engage inflation? The preferred measure of the Bank of Canada's inflation, which is this core inflation, next housing, still sticky around 4.2. So we're not out of the woods yet. So I think probably, but wouldn't bet the farm.
To that point, Earl, I'll bring you in on this because I think this dovetails with your view on where rates are going. The Bank of Canada says they're concerned about sticky inflation and they're prepared to hike again.
Yes, and that's correct. We didn't anticipate a hike today. There's 2 more meetings before the end of the year. We anticipate they're going to hike it, one of them, at a minimal.